minutes, we're going to go ahead and get started. My name is Jim Dunnigan. I'm a state representative from Utah, and I'm also the vice chair of the NCOIL Financial Services and Multi-Line Issues Committee. I'm going to moderate this general session. We have a great panel of speakers with us today to discuss a very important and timely issue. We touched on it earlier this morning with NAIC folks, and that's the impact of wildfire risk on the insurance market. Roughly 60,000 wildfires burn 8 million acres in the U.S. now each year. The reach and severity of wildfires in the U.S. has grown dramatically in the past several years. Sometimes when you think of wildfires, perhaps you think they only happen in California, but they are unfortunately spreading and are prevalent in my home state of Utah and other states. We've also seen them in Colorado, Idaho, New Mexico, Oregon, and Texas recently. Some of the numbers surrounding the impact of wildfires are truly staggering. By 2021, the 5-year average of acres burned by wildfires roughly doubled from what it was in the early 1990s. The insurance numbers associated with that increasing activity are equally staggering. Of the insured wildfire losses paid by the insurance industry since 1950, 70% of them have occurred since 2015. That's 70% of all insured losses in just the past 7 years, compared to 30% in the prior 75 years. In 2017 and 2018 combined, home insurers' underwriting losses in California reached an estimated $20 billion, more than double their profits from that line of business since the late 1990s. In light of those numbers, it's not surprising that policyholders have experienced some problems. While homeowners insurance pays for losses and damage to a property in the case of covered events, destruction and damage caused by wildfire is typically, but not always, included in homeowners insurance policies. And because of the increasing risk of wildfires, many homeowners living in communities in high-risk areas are facing steep increases in the cost of their homeowners insurance policies if they can find coverage that includes wildfire risk at all. So today's discussion is going to be a great opportunity to discuss the latest developments in many different aspects of wildfires, including preparation and mitigation measures, as well as new wildfire insurance regulations that were just enacted last month by the California Department of Insurance. You can find those regulations in your binder on page 231. I don't want to take up any more time because we have a great panel, and so we're going to go to that. We'd like to have a robust Q&A session. Let me introduce our panel. We have Commissioner John Pike. He's the Utah Insurance Commissioner. We have Amy Bach. She's Executive Director of United Policyholders. Roy Wright. He's the President and CEO of the Insurance Institute for Business and Home Safety. And Karen Collins. She's the Assistant Vice President of Personal Lines at the American Property Casualty Insurance Association. I encourage you to read their bios that are in the binder, which will explain more about them, and then reach out to them afterwards if you'd like. In terms of format, we'll hold all the questions until the end of our panelists have finished. And with that, we're going to start right off and go to Mr. Pike, Commissioner.
I think it's working now. There we go. Thank you, Representative Dunnigan. It's a privilege to be here with you today and at this conference this week. It's a great opportunity, and I'm really happy to be here with these experts in this particular area. It's certainly an area that we're interested in Utah and in the West, as Representative Dunnigan has just mentioned. I've got just a few slides that I'd like to refer to that actually some of these come from some of our own state data, but Allstate actually put some of these together for Representative Dunnigan and I at a meeting we held in September. And I just thought it was interesting. It's something we're certainly concerned about in our state and in the West. As you think about recent years, and I know we're going to hear some much even more detailed information from my colleagues here on the panel, But it's interesting. The last few years, in Utah, we have a lot of wildfires. This past year, I think we had a little bit better year, but I think we could all agree that as we across the country, as we have large fires, wildfires, we all feel the effects of that in one way or another. And so as you think about things being contemplated, as we recently in the last year or two, we've noticed that these fires are, as you can see on this slide, the wildfire season has increased in the western United States, prolonging the likelihood of fires in any given year. And you can see that on the graph on your left. And then not only has the season increased, but the western U.S. has also seen an increase in larger fires annually. And although you can't see the specific numbers, that chart on the right starts in 1970 and goes up through about 2020. And so you can certainly see more color is bad in this case. So both of those things are really, and this is where it concerns me and where I think it concerns or should concern legislators and of course the industry, is this can or could significantly threaten the availability or at least the relative availability, by that I mean in terms of expense, of homeowners insurance as it relates to fire. So next slide, please. Am I in charge of that?
Oh, this might be it.
Will that do it? There we go. That's the next one. So, and while this says Utah, this is really, part of this is Utah, part of it you can see that left graphic of the United States. Utah is one of the most wildfire-prone states in the United States, with 800 to 1,000 wildfires annually. And a lot of red in that. And another graphic I saw that I don't have with me today recently was that in terms of new homes built over the last decade, Utah is second only to California in terms of the number of homes built in areas that would be extremely prone to wildfires. So that gets concerning. Another thing, of course, that gets concerning is, as you see the right graphic of my home state, 87% of Utah properties, or more than 1 million homes, are at some risk of wildfires in the next 30 years. So, so then what are we to think? As I've had a few conversations with producers, as well as carriers, I hear differing things, but one of the things I hear from producers, from agents, is that they're hearing from some of the carriers that they represent that, well, there might be two reinsurers that are not so sure they're going to stay in, the Western market, or at least maybe speaking in my case for Utah. And as we've consulted people that no, I think, they've said, well, that's not the case, at least not yet. But that's still scary, right? And then, my agent friends, or several of them, that have said, well, we're still hearing that as they look at, as insurers look at wildfire potential maps, and the different entities doing maps, including my own state's gathering some information, and they're saying, well, as we look at those maps, there could be areas, that we're not really thinking of currently as at risk for wildfires that might be rated as such, and therefore, premiums higher or availability, reduced based on the number of insurers that won't insure in that area. So those concerns have been raised. So then what? As a regulator, I want to make sure that me and my department are resources to our legislature, to our governor, and of course ultimately the citizens of my state. And so we contemplate, so what next? My colleague from Colorado, Commissioner there, Mike Conley, is looking at doing a FAIR plan. California has a FAIR plan, has for years. Louisiana, talked to Jim Donlin, they've had a FAIR plan for years, and they've said, yeah, you should do a FAIR plan. But that may or may not be something that's politically feasible in all states. And so what's next? Next slide, see if I can get that to go. So the idea then is, I think really what we need to sort of promote is getting together and as residents, governments, and insurance companies to come up with solutions that will help this. Maintaining long-term insurance availability. It's going to be, I believe, it requires this kind of collaboration. So just teeing up a couple of things. As we look at mitigation, and we talked about it, we teased it a little bit in the previous session, but this is I guess, just various models of this, but looking to minimize the combustibles, the trees and other combustibles near to a home. And, obviously, you're going to do better the more you clear. Clearing 100 feet reduces the economic damages by 50%, according to IBHS, I believe, making mitigation a key driver of increasing the safety of that area. And so with many companies trying to leverage by doing brush inspections and other inspections as a means to mitigate and then rate the area, the property, then we have to say, well, what is the appetite, I guess, of the consumer market to respond to that? We'll see. I'm going to skip a couple things here. So one thing that's interesting for me anyway, as what next, as you look at an example, Wildfire Partners over in Boulder County, Colorado, some of you may be aware of, they established a program to help homeowners mitigate their properties and give them really specific information. They are funded by a federal grant from FEMA and the Boulder County government that helps make this happen so that you can, as this says, the benefits on-site wildfire home assessment can be performed, and if you're accepted, then you examine with a certified, specialist. You together examine and determine what is defensible in your space, in your lot, if you will, your property. And then you get a report that identifies the weak links. Financial awards are then available to subsidize the cost of hiring a wildfire partner forestry contractor. Of course, that means you've got to have one, more than one, hopefully, but in Boulder, they do. They have several that they certify, if you will, and you have to use one of those contractors to make sure that it's done correctly. And then the idea is, if you are able to get certification, then that you use that and take that to, as you can see here, Allstate, State Farm, and USAA insurance companies so far have recognized this particular certificate as proof of proper mitigation. So anyway, it's an interesting idea. This you can't see this at all, but you can see that on the right top area, they have different levels of mitigation that either could or should be achieved. And obviously, you've got green, yellow, red. You can see those boxes, but the more you clear, then the better, if you will, the better you do as you are trying to certify. That lower box in the middle is an example. It shows the different certified contractors that can be used in this Boulder Wildfire Partners example. So, at any rate, those are some of the things that I've been thinking about and kind of would kind of start the show off today. just teeing those things up as the issues, certainly in the West, you saw the map originally, seems to be more of a Western problem, and we're just talking about wildfires today, but I think some opportunities for public-private partnerships that might help in the mitigation efforts as opposed to going all the way to a FAIR plan, which may be talked about as well. Thank you, Representative
Thank you,
Dunnigan.
Commissioner. Thanks for kicking that off. That was great. Now we'll hear from Amy Bach.
Okay, good afternoon. It's such a pleasure to be here with all of you. I know that in those of you who represent constituents in areas that have been hit by tornadoes or wildfires are already very well aware of all the conversations that are going on around mitigation and the programs that have been set up that help homeowners do things like put a roof tie down on, or here, I should properly tee up my slides here. Let's see, how'd you do that? Rolled it. I don't know, we might need some tech help here.
He needs to switch it.
So he's got to bring up your slides.
Okay. So while he's doing that, I just jump right in without telling you anything about who I am or why you should care what I have to say. So we can roll back. Yeah, obviously I find this subject matter very interesting, very important. So wildfire risk and insurance markets, a little bit about the nonprofit that I run. We've been around since 1991. We have 3 programs I'm going to tell you about in a minute. We are funded by donations and grants. We're based in California, but we operate nationwide. We work very closely with a number of insurance regulators. I've been participating in the proceedings of the NEIC as an official consumer rep since 2009. I have known Assemblymember Cooley for probably longer than that. So it's been my privilege over the last 31 years to be helpful to property owners in connection with insurance matters, help them make good decisions, and then if they have a loss, help them navigate the process. So when there's a marketplace problem like we're having right now in California, and like Colorado is worrying that they're going to have, and Washington and Oregon are worrying that they're going to have, my organization is involved in trying to help problem solve, brainstorm and problem solve. So through our Roadmap to Recovery program, we've been working in wildfire prone areas now for years to teach people how to not just shop for the cheapest premium, how to really pay attention to ensuring their assets to value, and then also to do things to make, first, it's like create a home inventory, et cetera. So as we all know, and why we're here, I think, it's really imperative that that insurers make adjustments to their rating and underwriting practices that reward risk reduction. Because as all of you know, if you're public officials, people are often hesitant to spend money on things that they can't see, enjoy, infrastructure. It's like, oh, why would I, it seems like it's working. Why do I need new plumbing, right? So for a lot of people, when you say to them, oh, you need to make home improvements, and they're on a limited budget or they're just a normal person, they're going to say, well, why fix it if it ain't broke? My roof is fine. Why do I need to change it? But you do need to incentivize people if you need them to make improvements that are going to reduce their risk. And insurance incentives, of course, can be very powerful. And so what we're seeing is, certainly in California, since we had a series of big fires, but we also had a tree mortality crisis, which killed off over 100 million trees along the Sierra Nevadas, and insurers really noticed it. We started seeing a lot of properties in the regions near the Sierras get non-renewed. And that kind of started I would almost say a snowballing effect in our market, and it just seemed like it kept getting worse. And we had, combined with that, we had a series of bad fires. We had the wine country fires in 2017. We had the Camp Fire at Paradise 2018. We had the Thomas Fire, Ventura, with the Woolsey Fire. So sort of a perfect storm of some mega fires and and also technology, which is I'm going to mention here, that predictive modeling and risk scores, aerial and other surveillance technology that insurers are now using is in some ways helping speed up the availability and affordability problems that are hitting our property and casualty market, because insurers can see these vivid recreations of what might happen, and it looks very scary. And I really think it influences the executive's decision-making, right? So that's just a factor. I don't know that it's it is what it is, right? So, and then I think that, so a lot of states have already, either through the legislatures or through the regulatory process, have mandated insurance rate reductions for effective mitigation in different ways. Some have mandated specific reductions in rates, specific discounts, and some have just said, insurers, you need to adjust, right? So, in California, we had, a lobbyist that for the insurers in California said to me years ago, Amy, please don't support an artificial 15% mandated discount. That might sound good, but if it's not justified, it would make matters worse. So our organization, we have shifted from focusing on helping people insure to value to helping people reduce risk in wildfire areas. And we've been doing that in collaboration with a lot of stakeholders, including my friend Roy Wright here. And we, so what my organization is doing, I heard the message loud and clear. No arbitrary mandated numerical discount, please. So, okay, what would work? We know people want premium discounts. We know that they need to understand that they're being scored more and more now, that insurers are using systems that assign a number. So what can you do to make your number better? We know that people want non-renewal protections, but we also know that insurers are very, very opposed to the concept that they be forced to take customers they don't want. Again, I've heard that loud and clear. I understand it from a business person's perspective, but those are the two rewards people need. They need to know that if they spend the money on fixing up their house, they're going to get either a break on their insurance or they're going to get to keep their insurance. Obviously, the house less likely to burn is a great incentive, but it doesn't always, it doesn't seem as present to most people. So I convened a working group a couple years ago. We call it WRAP group, Wildfire Risk Reduction, Asset Protection. What can you do to make insurance not so nerdy? WRAP group, right? Okay. So we've been meeting about every month now for a couple years. And what I do is I invite as speakers the people that I think are leading the charge for good programs. We had the Wildfire Partners guys present to us. We have fire chiefs present. So this is just a screenshot from one of our meetings, and you can see the guy on the left up there is a fire chief from Marin. We always have a couple fire chiefs on there. And they've got this great program where they're way ahead, and we're trying to get other people to see what they're doing and pick up from that. They've got this team, and they go out, and they did a bond measure. They floated a local bond measure to finance grants. And also, so they have, I'm sure you know these people, you met with them. They're doing amazing work. So they formed a wildfire authority so they could float this, so they could do the bond, and they could, and you can see, I don't know if you can actually see that, but you can see that the monies that they've granted, to the residents, is coming back to them threefold, because when they give a grant, then the homeowner invests. It looks like in the first one, for $1 million worth of grants they've given out, homeowners have then gone and invested $3 million. So this is the kind of hands-on community program that we need everywhere. It builds on some of the success of the Boulder program. This is just to say we've made a lot of progress in the last year. There were no standards for what constituted effective risk reduction of an existing home. We had standards in the code for a new home, but not for an existing. So my group put one together just to kind of keep the pressure on. Then IVHS did theirs, which is, of course, much more important because they're a very respected body by the insurance industry. And then an interagency partnership in California put their own standards. They all look very similar. All the experts pretty much agree. We've got voluntary insured discounts that are being offered and our DOI has, you can go on their website and you can find which insurers are voluntarily offering mitigation discounts for wildfire risk reduction. This is Wildfire Partners. They're not saying you get a discount on your insurance. They're saying if you do our program, we'll give you a certificate. And what the insurers that participate in that program are saying, or at least they don't want to guarantee, we'll renew for sure if you do it. But what the program says is that they don't, it says here, we're not aware of any insurance companies, this is from Wildfire Partners, the Boulder Program Commissioner Pike reference. We're not aware of any insurance companies who have denied coverage to a Wildfire Partners certified home. So that's great progress. That's insurers voluntarily agreeing to reward, which we love, right? I don't care if it's a mandate, voluntary, as long as it happens. That's basically how I see it. Roy will tell you about his program, his Wildfire Prepared Home program, which is incredibly important. Also this year, the DOI put out in California regulations mandating rating plan adjustments. Again, they didn't specify a number. They just said you must adjust your rating plans to account for both individual and community risk reduction. The insurers have not sued to block them, so I consider that a huge win. So we're all sort of, seems like we're moving together in the same direction, which is great. Lots of increases in funding for wildfire risk reduction. My organization is, we got a grant to do a resource center where we are putting together for the whole state what kind of grants you might be able to get, what kind of technical assistance you can get. And challenges remain. As you heard from Commissioner Pike, Commissioner Conway in Colorado is looking at what kind of recipe he might want to pursue for his residual market plan. Is it going to look more like Florida or Louisiana Citizens, or is it going to look more like the California Fair Plan, which is an association of all of insurers who voluntarily write, which is my preference for a recipe. The Fair Plan products need some improvement, but the plan is basically very solid, but it wasn't built to hold the number of policyholders it now has. Very similar in that way to Florida. I know you need me to wrap up, so I'll just a couple more points. You know, there is some resistance to the defensible space component of the IBHS program. I'm sorry to say, some people are very attached to their landscaping, and so that's sort of a challenge. But we've seen, you know, people said in flood areas, if I elevate, my home's going to look hideous. I don't want to do it. Well, we made a lot of progress in showing how they don't have to look hideous. You can, and similarly, I think, you know, with the wildfire point, we're going to be illustrating to people your house can still look beautiful even though it doesn't have flammable bushes right around it. So, and then of course we have the overall impact on the PNC sector of their perceptions around climate change and the reinsurance sector's reactions. A whole long other topic, but for now, I'd say we're on the right track with restoring available, affordable options for people to insure their homes if they're in a wildfire-prone area, but we do have a lot of work ahead of us. And I thank you so much for your time and look forward to answering questions during the Q&A.
Amy, thank you very much. We appreciate your expertise in this area. Okay, now we'll hear from Roy Wright.
Beautiful. I'll let him launch. Beautiful. It's great to be with you all. I want to look at this kind of in the context of disasters, and if you'll give me just 30 seconds, I think it's helpful to root ourselves in some things that go on in other parts of the country. We're here in Louisiana, and you look at the impact of how disaster sits on disaster sits on disaster. You go back to Katrina, there was a oil spill, there's no-name events. These then hit with successive pieces with more hurricanes, and they keep coming. And as we watch these kind of effects, there is an impact that happens to the people who live in those communities. We call it a compounding effect because the weather, the damage, and the devastation, yes, they produce material damage, but they have an impact on mental health, how a community rebounds, the tax base that is there. Oftentimes, we think about this compounding effect for folks who experience hurricanes. But let's look in California. 19 of the 20 most devastating fires in California have played out just in the last 25 years. And again, we see the layer upon layer upon layer. And clearly, insurance has a pivotal role. But as legislators, obviously, you deal with the breadth of the needs of those communities about how they can rebound. And most importantly, I believe, once the people are there, is the tax base back in place so the economy can become self-sustaining again. When we look at wildfires, we think about them in terms of three concentric circles. There's a broader ecosystem piece that is involved. Clearly, that deals with how you deal with land management and things like prescribed burn. You then come inside to what can play out in a community, and then down to the structure itself. But lest we think we're just going to make wildfires go away, I'll use a California number if you can excuse the attention there. In 2022, there have been 7,300 ignitions in the state. Most wildfires are put out and we never hear about them. A very small number of them take flight, and they become catastrophic in that space. I think too often we think about what we see on TV when we deal with wildfires, and we imagine that this wall of flame is what comes and approaches the structure. And while that does happen, that's not how most ignitions occur. 90% of ignitions happen because of embers, these pieces that pick up and take flight, right? These are those embers that could be as small as your thumb, often the size of the palm of your hand, that can regularly pick up and loft a half mile away. Do not just focus on where you see the flame. This stuff picks up and moves, and it finds pieces in neighborhoods and takes root. And that's where we see wildfires occur. But as we've done the science on this, what makes this particularly difficult as a hazard is that it requires, I presume I'm not done yet. Like, wow, that was fast. I've done a lot of work on flood, wind, and earthquake. When you mitigate for flood, you raise a house, you make sure that it can withstand. The neighbors might flood, but you're in good shape. You mitigate for hurricane or wind, you put the shutters in, you do the right things. There may be errant debris, but you're going to be okay. In wildfire, the structures become part of the disaster. They become part of the fuel that then creates more embers that push forward. And it has this accelerating effect. The Insurance Institute for Business and Home Safety as an organization has been around for 40 years. About 15 years ago, the property insurers came together and built this facility just south of Charlotte in South Carolina, where we test structures at full scale. And we work this piece between what goes on in the field and what can we do in the lab. So we'll go to the Midwest and deal with elements related to hail and the elements that play in that space. We go to really build and deal with the fire elements at full scale inside the lab and look at the field. We look at the elements related to wind and rain and those pieces. All of that moves us to the work that we have ultimately done, and I want to dive into the particulars on a wildfire prepared home. We've been doing research on wildfire, particularly the intersection of the wildfire and the built environment in earnest over the last 13 years. We have the only facility that can do things at full scale. And we've looked holistically at a large set of things that make things better. But whether it was from consumer groups, public policy, or the insurance industry, began to lean pretty hard on us about 2 years ago and said, that's all fine and good, but tell me what matters most. You gave me a big long menu, it's too long. Tell me what matters most. And so we have these elements that says these are the essentials as you look at a residential structure. First of all, you need to have a Class A roof. Roofs really, really matter. For most homes that would be 1,250 square foot homes, you have a 2,000 square foot surface that is that roof. If those embers land there, you need to make sure they don't ignite. Well, here's the best news. Almost everyone has a Class A roof. The asphalt shingles, tile, those kinds of approaches already meet that element. There is a very small percentage of folks who have cedar shake shingles. They tend to be on custom homes, and they are highly problematic. But I look at the roof piece and go, as essential as it is, it's not the most difficult piece because almost everyone already meets that today. Secondly, we look at some building features. Ember-resistant vents. So those vents for your crawl space as well as your attic, we regularly have those pieces that are 8 by 16 inches long. You need to make sure that there is a mesh in place so that embers can't get in. Embers get into the attic, they smolder, they ignite, you got a fire. Costs about $50. Not an expensive piece to deal with. There's a related element related to the base there at the 6 inches at the bottom of the wall. And then we turn to defensible space. This is the big hippo we got to move. Defensible space comes in layers, 0 to 5 feet, 5 to 30, 30 to 100. You're out in a rural context, you can work all the way to 100 feet as the commissioner laid out. If you're in a suburban neighborhood, well, 30 feet away, you're in your neighbor's kitchen, right? And so we start looking at these elements where things become interdependent. For the 5 feet closest to the house, we're so focused there because when embers arrive, you need to make sure that they don't ignite and get to flame because that's how the house, particularly the open eaves, can catch fire. And so the science is very, very clear. Nothing flammable inside of 5 feet. And by nothing flammable, we mean nothing. So if you have a fence, the last 5 feet of that gate needs to be metal. If you're looking at your bushes and the like, it's not that you can't have them, but they need to be 5 feet away. Not some of your bushes, all of your bushes. If you have trees on your property, you need to make sure that they're not hanging over the house or within that 5 feet. Not some of the trees, all of the trees. People like to put mulch around, right? It keeps the weeds away. That's like spreading matches around your house. Some people may choose to put rock or pavers. Others may just have exposed dirt. They're both allowable in that space, but that first 5 feet needs to be entirely clear. Doesn't mean this house would never burn. Doesn't mean there aren't other things we might want to see. We have a set of things of plus dimensions that we would prefer to do. More info on fencing, more on the siding, elements related to the windows and enclosing the eaves, moving out buildings, particularly sheds farther away. But it's those orange elements that we say are fundamentally required. So, IBHS has had a fortified program dealing with both roofs and construction in the Atlantic and Gulf Coast. We have brought that to this wildfire dimension. A homeowner can go through and take this action. There's a small fee just to deal with the processing elements. They start online. They answer some pieces. Is this true about your house? Ultimately, there needs to be an inspector that looks at it and verifies it, right? And then a designation can be done. We have at wildfireprepared.org all of the details about the elements that need to take place. Some of this can be done yourself. Some of it might require a contractor. So much of it just has to do with how much landscaping do you have up very close to your house. Becomes a fundamental element that is there. People can apply, they'll see their eligibility. At this point, it's just in California that we are offering it, but this will in the coming year be something we are pushing at states beyond. That inspection piece plays out. This is an imperative. While I love to trust people, I can't. It needs to be verified. It needs to be independently verified in that space, particularly looking at those 5 feet dimensions. That designation is good for multiple years, but we do require on an annual basis that a landscape review be done. They do this on their phone. They have to upload pictures and make sure that you didn't inadvertently plant something you weren't supposed to within the 5 feet. There are some limited amounts of potted plants that are allowed on porches and decks, but they have to be of a size that you could pick up and move them before you evacuated during a wildfire. This element related to an annual piece is unlike anything else we deal with in the built environment. It says each year we've got to keep doing a checkup in this space. There are folks that are leaning in on this. So we talked a bit about the campfire in Paradise. They took this element as they're dealing with their pieces and chose to take the designation standard that we have and adopt it into their local code. As they're going through a massive rebuilding there in Paradise, California, it has become the default for new construction to meet these standards. But as we look at the elements, there is a complexity of scale. Addressing the needs of one house is critically important. But the point where this becomes an insurance problem or even an insurance crisis is when we have conflagration. You lose a dozen homes, even 100 homes, that is a very bad day for 100 families. But you have not disrupted the ability to pay. When these fires happen, you may be perfectly mitigated, but your neighbors are not. Well, when they become hospitable to those embers and their house is fully engulfed, the 5 feet ain't helping you at that point, because radiant heat, when you have a house that is burning at 800 degrees next door to you, you're going to catch fire. And we start seeing these kind of movements that play. I think the Marshall File in Colorado is very instructive. They had 3 sections with about 100 homes that were lost through conflagration, and then they had fire suppression crews that were moving throughout the community. So you would find this hopscotch of a dozen homes, and then a dozen homes, and then a dozen homes, a block or two apart. Why is that happening? Well, because once that home ignites, it's throwing embers a block or two away. They're igniting. Firefighters are getting to one place and moving to the next. Each home is going to be insured one at a time by each of their providers. We have to come up with answers that only state legislatures and city councils are going to be able to do to really make this happen at neighborhood scales, not just each one on their own. There is an additional cost to this. I'm happy to go into questions on this. California has their code on Chapter 7A of the California Building Code. There is an international WUI code offered by the International Code Council in these pieces. The increments that we're showing you as they build on this at the point of new construction can sometimes be just about $3,000. Right? They are not game-changing in terms of the cost point. Unfortunately, the retrofit stuff is so much contingent on the structure and how much landscaping is there. Sometimes that retrofit price may just be $1,000 or $2,000, and sometimes it may be 5 figures. And by the time you have to deal with movement of large and old trees, it can become substantial. And I think this is a place where we're going to have public policy ways through grant programs and others to help meet those folks who need it. Because when you hit that tipping point in the community, you open up not just yourself to that catastrophic damage, you open up your neighbors to the same. With that, sir, I'm done.
Thank you. Love that presentation. Thank you very much. Okay, now let's hear from Karen Collins.
Great. Thanks for having me here today. I'm Karen Collins with the APCIA, representing the insurance viewpoint, insurance industry viewpoint. I'm going to just jump right into this. Which one is this? Down? What I'd like to present today is an overview of the insurance industry's view of the issues, including some insights on these mitigation standards, and really focus towards the end on our view of the solutions that we need to improve the affordability and availability of insurance. Recent wildfire losses have obviously cost insurers tens of billions of dollars in insured losses, and we're facing increasing cost and exposure as more homes and communities are built out in these WUI regions, while we're also facing really difficult environmental conditions, climate change and worsening drought. These are obviously leading to more catastrophic fires, as we have just heard, and they're threatening a lot of these communities around us. As a result of these trends and increasing costs, this is where the affordability and availability of insurance has become an increasing concern in our wildfire-prone regions across a number of western states. And I'm going too fast. To help emphasize these trends, some quick data points. On the left is a chart from Swiss Re that shows global wildfire losses in the last decade were more than 5 times higher than the prior decades. The chart on the right from Aon has noted since 2017, 8 of the 10 costliest insured wildfire events in the world have happened in California. And this is where insurers are also battling the higher prospective or future loss costs due to a combination of issues. Supply chain, inflation, all of these are compounding it. In addition to costs, however, the overall exposure that insurers are facing is continuing to grow. A couple visuals to help illustrate the growth of the WUI. On the left, we have data from the U.S. Forest Service that shows where the wildland-urban interface grew the most between 1990 through 2010. In short, the WUI was the fastest growing land use type as it increased from just over 31 to over 43 million homes, a 41% growth. And the vast majority of the growth of the WUI was because of new homes that were added in this, over 97% at the time, not because of an increase in wildland vegetation. The chart on the right, which Commissioner Pike actually, I think, was mentioning this particular one, this is from Cape Analytics and Hazard Hub, and it shows housing growth in the WUI since 2011, the most recent decade. And you see that it really further continued to accelerate. This continued expansion in areas at high risk without strong enforcement of WUI-specific building codes has not only drawn the attention of insurers, but also other researchers in the scientific community. Recent studies have been emerging in the last couple of years, really identifying land use policies in high-risk areas as a significant contributor to recent insurance market challenges, and particularly in the wildfire space. I've pulled together a few of those that are highlighted here. These, we cannot stress enough, are the underlying issues that are contributing to a lot of the current availability and affordability issues now affecting consumers. The current market challenges are often a symptom of a broader set of issues, and this is where we are pushing policymakers such as yourself to try to help us address this. Given the recent losses and increasing exposure, the insurance industry has really been forced into a position of evaluating at what point does the risk exceed our capacity to pay for the resulting losses. Now, when faced with growing catastrophic exposure, insurers might typically respond in a few different ways. They might raise premiums to pay for the cost of future losses. They might consider adjustments in product design. They might limit their exposure by writing fewer policies or requiring certain mitigation to reduce the chance of loss as a condition of writing coverage. And this is what we're seeing as insurers have been even more disciplined in their underwriting to really manage this recent change in risk. Some insurers may be more exposed than others, which essentially means that even if a risk has been fully mitigated, that may still result in differing underwriting or pricing decisions by individual carrier. And this has become even more pronounced recently as the costs of reinsurance have climbed significantly, which is resulting in one of the hardest reinsurance market cycles in a generation. Now, to help manage through such issues, wildfire risk models have grown to become a critical tool for insurers to help identify and assess risk. For those not familiar, catastrophe risk models have done a great job of mapping historical fire footprints along with numerous other characteristics to help identify the regions that are most prone to wildfires. These models also incorporate how wildfires may evolve due to climate change and increasing drought and the continued expansion of communities in these regions. Such tools can actually help insurers find those diamonds in the rough, enabling them to underwrite more risk than they otherwise would have considered in a high-risk area. So, in light of recent trends, the key priorities that insurers are really focused on right now have been rate adequacy, risk identification, and risk reduction. Insurers strongly believe that as more homes and communities are hardened, this should result in a meaningful decrease in losses, which should translate to more affordable and available coverage for consumers. Now, the biggest leap forward this year in the effort has really been to, with the reduction of risk, has been the emergence of what has been a coalescing, as was described by others here at the table, a coalescing of a science-based wildfire mitigation standard, which has long been needed to then build additional policy actions upon. Wildfire, as noted, has been a very unique and challenging risk from other catastrophic perils such as hurricanes, and that to effectively and meaningfully reduce risk, it needs both structural adaptation, as Roy mentioned, management of fuels, and the latter of which must be done on that recurring basis. And it must be done for that one property and the surrounding community. And that poses a very unique challenge for the insurance industry, because we've only, in prior perils that we've insured, needed to establish a standard focused on hardening a single home with validation done as a one-time event. So this is a very distinct change in how we manage this. We understand from a building code perspective, as Roy mentioned, there's current WUI building codes, the International Building Code Chapter 7. We are aware that there's development underway for the ICC 605 standard, which will be the next iteration of the IWUI code to finally incorporate vegetation management standards. Once available, and I don't know the timeline for that, but once available, insurers would love to see this code adopted in all wildfire-exposed regions, not just the highest risk regions. There's also a number of community mitigation organizations, such as the Firewise USA program, excellent program that helps in building community awareness of risk and providing steps to reduce risk. We have, of course, the Wildfire Prepared program that Roy just previewed. This focuses on a set of requisite mitigation actions that, when taken together, will significantly reduce a given property's wildfire risk. Now, the insurance industry, as others have said, we recognize the extensive and science-based research that's been done by IBHS, and we hope to leverage this new program as effectively as we have their fortified program in many of our coastal states, including for insurance-related premium credits. However, it's important to stress that the insurance industry's primary objective isn't to simply provide a discount, but rather to prevent homes from burning. To resolve the affordability and availability issues, our focus must be reducing overall losses. In that vein, it's important to recognize that insurers must base premiums on actuarially sound standards, and any premium credits that are offered must be risk-based. And that means mitigation discounts must reflect the actual reduction in risk and ability to help prevent or reduce loss. So our industry, we've been aggressively studying this issue to actually quantify the value of mitigation measures and translating those into dollars. There's some data and early analysis emerging on this, which is great, but we're not quite there on achieving fully credible data, so this is an ongoing effort, and we're just cautioning states about getting ahead of the science, which can unfortunately create unintended consequence on the health of the market. Aside from insurance discounts...
Karen, just so we can manage our time, how many slides do you have left?
For this one, I'm working off of I am literally at, I think, one of my last couple of slides here. It's my last 2 slides.
Okay, thank you.
Aside from discounts, what we really want to focus those here at NCOIL on is to look not just at insurance incentives, but also the broader value proposition to promote action, and that will interject more market stability. Managing too much tech here right now. So the solutions, in our view, and this is looking back at a lot of coastal states and how they've approached mitigation, a comprehensive resilient strategy is needed that really looks at all of the different economic incentives. Many coastal states exposed to severe wind damage, they've had the fortified program, they've been able to earn not just insurance discounts, but also rebates up to 25% of building permit fees. Other states have provided funding through grants, low-interest loans, income tax credits for cost to retrofit home, in some cases sales tax credits for materials purchased to help retrofit. We've got the new cost share pilot program in California that matches funding to support mitigation. In addition to these incentives, we're also working with the construction trades and realtors to help develop consumer education on potential return on investment benefits that can be realized from retrofitting, particularly potentially to the Wildfire Prepared Home Standard. These can benefit through increasing property resale values, improving insurability, which is a huge consideration in the real estate transactions in a number of states. The cost difference to build to IBH's wildfire prepared home, as Roy mentioned, is not substantial, so that it should be low-hanging fruit for any communities, especially for new construction, in putting that into place. A lot of what I really want to focus on, and there's so much to unpack here, we've put it into a set of 3 research papers that I encourage you, if you're going to be tackling a lot of these insurance issues, this will give you a great foundation of knowledge. But one of the last things I just really want to underscore is that while risk reduction is imperative, and there's a lot that we can focus on that, one of the biggest solutions, and I believe the most critical to addressing the current insurance market instability issues, is that insurers similarly need greater stability and regulatory flexibility to manage what has been rapidly evolving wildfire risk. And we respectfully stress this in the immediate aftermath of catastrophic events as insurers work to recapitalize. Rate adequacy following those events become a top concern. But we've seen a lot of new legislation that's been emerging in the last couple of years in several of our western states. And in some cases, a lot of this legislation has been really focused on consumer protections to expand recovery timeframes and policy coverage benefits. And while a lot of these are very well-intentioned, there's been a number of changes that have actually had unintended consequences of exacerbating the current affordability and availability issues, as they may require higher minimum coverage to benefit consumers in rebuilding, which simply brings up the additional overall cost for coverage. Separately, in some cases, recent laws have altered the design and function of certain coverages which are not contemplated on the policy, and it has also created unintended consequence of introducing new ambiguity and uncertainty in the policy contract. And those create other challenges for insurers and reinsurers to model and price anticipated losses. So when this occurs, this can give some companies hesitation to provide coverage in high-risk areas, or they may need companies to secure additional capital to cover a wider margin of error given the additional uncertainty. So I want to raise that flag for the legislators specifically that are tackling wildfire issues. We are very focused on affordability and availability, and we don't want to create more unintended consequences that exacerbate that. So with that, I will certainly welcome any questions. I know that we're tight on time, but I appreciate the time to speak, and I'm always available, not just today, but afterwards to help work with you guys through these issues.
Excellent. Thank you very much. Thank all of our panelists. Are there questions or comments from the committee? Go ahead.
Hi, I'm Carrie Wood from Connecticut, so I'm not experiencing a lot of these issues, but I do empathize with my fellow legislators that are, because this is, very scary. I just wanted to share one thing. In Connecticut, we had a crumbling foundations issue where there was a chemical that caused a lot of the foundations to crumble, and we started a captive insurance company that helped replace a lot of those foundations, and they will be fully replaced for anyone that needs a new foundation. I feel like the captive insurance industry could be tapped to help with a lot of these issues. Have you worked with the captives, or is that when you're saying reinsurance? I know reinsurance and captives are different, but I just thought that model was really interesting because it puts into place a source of funding, that it's not reliant on grants. We all know that, grants sometimes will be there and sometimes they won't, but if we're going to help, homeowners towards this resiliency, a longer term, more stable plan, I think would need to be in place. But it did work for Connecticut, so I just wanted to throw that out there.
Karen may have more perspective from the industry, but I know that in California, the non-admitted carriers have picked up a lot of market share during this crisis from the admitted, and I really haven't heard anybody talk about captives as an option.
Yeah, no, in the current conversations that I've been a part of, I similarly haven't heard captive come up specifically. I think in the western states, we haven't seen catastrophes in the same way that we've seen coastal markets, and so we've never really needed to leverage the excess surplus lines market in a way that we are seeing now, and there's some very unique challenges within some of our wildfire states and certain niche clients, such as maybe high risk or high net worth clients that require a certain level of very targeted handling it, and some of those risks are more challenging to manage within some of the regulatory systems and some of the markets that we do have. And so you're seeing some growth in the non-admitted markets. And again, we're not seeing the utilization of that in the same way we've seen some of our highest risk coastal markets. And so I think that's one of the key relief valves that has typically been leveraged. We do have some FAIR plans that exist. Again, if the issues are for high net worth niche markets, FAIR plans don't provide a great solution for those clients in particular. So we're trying to find the ways to balance kind of where some of those needs are. But yes, no, the capacity to provide coverage, which in catastrophe markets, you need reinsurance, which is like insurance for insurance company, or you need alternative capital such as catastrophe bonds or insurance-linked securities. And there's a lot of variety of mechanisms that have emerged in recent years. And insurers just need to look to use all of those tools and have the flexibility to be able to leverage those tools as needed.
Thank you, Representative Wood. Other comments? Go ahead, Representative.
Is there any statewide effort in any state to prevent new construction in these areas, or when structures are lost, to prevent rebuilding in those areas? I live in a floodplain in the Mississippi Delta, and I'm not sure who condemned it. It was done long before I knew why, but we had a whole neighborhood that was sort of built in a floodplain, and I think it was FEMA that condemned the property essentially, and they wouldn't allow them to rebuild there because it consistently flooded for every other year.
Yes, let me use the flood piece to walk back from. In the FEMA programs, and I used to lead that part of FEMA, so I know it well, it is all voluntary. Every bit of it. There is no condemnation authority. There is no ability to do takings on that front. And so in every instance, it has to be a local and state-driven approach. Private property is a very difficult thing to regulate. At the end of the day, if that home already exists there, it is unlikely that they're going to be willing to step back. I do know that as new developments are being contemplated, whether in any of these places in the West, these conversations go on, and it always requires an action of the county commission or the city council for those actions to take place. And I would assert to you there's plenty of science to inform it, but the only place under the U.S. federal system where that authority lies is going to be at the state or county/local level.
Yep.
And I might just add to that, I know that in California, I live in California, Amy lives in California, Roy is from California, and we've seen a lot of change there. A lot of the land use, as he mentioned, is local, and we're starting to see, as there's more attention on land use planning, there have been some challenges, legal challenges to new developments, and this is where it's important that lawmakers with courage start to push back on these, because often you have these high-risk hillsides, beautiful views, they want to develop them for the tax base. But when you look at some of the CAT models and the historical data that's available, these have burned through maybe 3-4 times in recent decades. They are prone to that. And so reassessing these and starting to push back, we're starting to see some legal challenges to that, but we need more communities to have that awareness of what that prior exposure has been and what it's likely to do currently.
Representative Ferguson, did you have a
One other thing
follow-up?
I'd say to this, because I think you look more holistically in terms of what's happening in a state legislature. California has a more progressive view towards much of this than you might find in other parts of the country, and they have abilities to look at this through their environmental laws. Unfortunately, there are agencies, sometimes Attorney General's office, sometimes other, who some well-intentioned people have read a thing or two and decide, well, I've got an answer for you. And they're like, well, what we really need is more high-density building. And I'm like, wait a second. You want to put the buildings closer together so that the domino can just fly through. And so you get to these points, and I think more and more what we have seen on flood across the country, and we have seen about hurricane in the southeast, is a much broader set of leaders and agencies are going to have to lean in and learn about wildfire, because the best intentioned person in an attorney general's office who says what you really need is to put the structures closer together, and we're like, actually building some high-end things that are on quarter-acre lots might be a better solution for wildfire. And they go, I didn't think about it that way. We're going to have to do a whole lot more to help agencies and experts across those pieces learn.
The conversations are happening more often now. You're hearing people, I just did an interview with a reporter, and why are we letting people, Coffee Park, and, that was the second time it had burned, the Paradise, the same thing, the Chimney Canyon, that it had burned before. I think, telling people that they can't rebuild is very, very hard because people, a lot of the motivation, in these wildfire areas, my organization's working in Boulder now, and, Marshall Strong and, all the bumper stickers, we will rebuild. And, there's a tremendous amount of energy and pride into, like, we're not going to be bested by this disaster. We're going to come back strong. So it's very, very hard. But the conversations are definitely starting.
Well, I may ask a follow-up. You said that you can't condemn it. Would one of the reasons not to rebuild be that mortgage companies would require insurance, and if they can't get insurance, they might choose to not build?
I think that that's a theoretical possibility. I don't think that we're seeing that today. Even in the devastated areas like Paradise, California, where 19,000 structures were lost, the insurers paid their bills. But when you have disrupted the economy in such a severe way, if there aren't jobs, I actually think that's what keeps people from coming back, is if the economic engine for jobs isn't there, you'll have a problem.
Thank you. Any other questions? Well, that concludes our discussion. Let's give our panelists a round of applause.